You're listening to Systemic Error Podcast. The failure was designed.
Investor funds set ablaze as Trump-backed venture collapses spectacularly. Report, based on an article by Tom Bogany. Trump's crypto shell game is not a failure, it's the point. A Wall Street Journal report describes a Trump family crypto venture imploding into a fire sale. AI Financial, once tied up with World Liberty Financial, is now trying to unload its core business for about $15 million after investors watched the stock crater. That is the surface story. The political story is simpler and uglier. The Trump family extracted the upside, while outside investors were left holding the wreckage. Who held the power? The Trump family did. Not the small investors, not the Nasdaq-listed shell company, not the people buying into future and innovation and all the other language used to launder a cash grab into a business plan. World Liberty Financial acquired control, set the terms, and retained 75% of WLFI token sale proceeds. That is the power relationship that matters. A presidency layered over that family operation makes the imbalance even more obscene. Trump disclosed over $1.4 billion in 2025 from crypto ventures, including $527 million from WLFI token sales, according to the report. This is not some passive family investment sitting off to the side of public life. It is an enrichment pipeline attached to the office of the president. The deal was built to feed the top. The structure described by the journal reads less like capitalism than extraction with a ticker symbol. AI Financial paid by taking World Liberty's own cryptocurrency. Then AI Financial raised another $750 million from outside investors specifically to buy more of that same token. When the token fell 70%, the company was left with a largely unusable asset and collapsing shares. That is not market risk in the abstract. It is a design that shifts danger downward and cash upward. The Trump side got liquidity, everyone else got exposure. The real losers were never the point. The journal says the deal was a money loser for almost everyone except the Trumps. That is the key sentence. In these arrangements, failure is not a bug. It is how the winnings are secured. Once the money has been pulled out, the wreckage can be blamed on volatility, hype, or the supposed irrationality of crypto markets. But the source gives away the real sequence. The Trump family's proceeds were insulated by the structure of the token sales. Investors bought into a vehicle that was already rigged to funnel value upward. When the token collapsed, the public narrative became the venture is struggling, as if the losses were an unfortunate accident rather than the predictable result of a deal built around insider enrichment. The misdirection is the story. Notice the convenient framing. A family crypto venture in trouble, a fire sale, a money loser. That language softens the political reality. The issue is not that Trump touched a bad investment. The issue is that the president's family appears to have used a speculative financial scheme to pull out hundreds of millions while other people were left with depreciating assets. That is corruption in plain view, even when clothed in tokenomics and Nasdaq listing jargon. The complaint is not that Democrats are being shrill when they object. The complaint should be that this is what unchecked power now looks like. The White House as a brand, the brand as a monetization engine, and the losses exported to everyone outside the family circle. What this reveals, this story is not mainly about crypto. It is about how authoritarian politics and private enrichment reinforce each other. The governing class is not merely tolerant of grift, it is organized around it. The point is to make wealth extraction look like entrepreneurship, to make public office look like a side business, and to make the damage look like an unfortunate market correction. The deeper pattern is straightforward. When power is captured by people willing to treat institutions as personal property, finance becomes a weapon for moving money upward and responsibility outward. The shell company changes names. The token loses value. The family keeps the cash. That is not a glitch in the system. It is the system's error made deliberate. You've been listening to Systemic Error. Thanks to Raw Story for today's article. With the automated voice of Clara, thanks for listening.